For days, Indians have been fighting their way through floods. In New Delhi, residents say heavy monsoon rains are causing the same problem year after year.
Although this road connects to the national highway, whenever it rains we face the same problems. Wherever one goes there is waterlogging. All the drains are clogged.
More than a month of heavy rainfall has worsened the difficulties many Indians had already been facing due to the coronavirus pandemic. On Thursday, new infections reached a single-day high of nearly 70,000 cases. Consulting firm Verisk Maplecroft says that together with Brazil and South Africa, India faces the hardest road to economic recovery among G20 nations. India's economy is expected to shrink 20% in the quarter to June, bringing the contraction for the full year to more than 5%. In Brazil, GDP is expected to contract at least 5.7% this year. South Africa is faring worse, with the economy forecast to shrink more than 8% this year, its deepest slump in nearly a century. The Verisk Maplecroft study shows their main hurdle on the road to recovery lies at the top. South African government officials are accused of pocketing coronavirus funds that were meant to go to the country's poorest people. Authorities are now investigating irregularities in COVID-19 tenders worth around $300 million. Brazil and India's COVID-19 responses have also been criticized.
Corrupt, ineffective, and unstable governments will be limited in their ability to direct funding to where it is most needed, failing to revive the economy even after the immediate crisis is dealt with.
What all three countries also have in common is a low ability to handle shocks. According to Verisk Maplecroft, the adverse combination of poverty with lower human capital makes them prone to civil unrest. Like their developed G20 counterparts, both South Africa and India imposed strict lockdowns early, but they didn't have the financial power to counter the weeks of economic stalemate. Brazil's President Jair Bolsonaro has kept the economy open, even as the country ranks second in the world in its number of COVID-19 infections. Together, Brazil, India and South Africa make up a fifth of the world's population and 10% of the global economy. The pandemic is already causing high uncertainty for investors. But Verisk Maplecroft says weak governance only makes it harder for the worst affected countries to get out of the coronavirus slump. Sibel Karkus, TRT World.
Well, for more on this, Ryan Connelly joins us now from Washington. He's the practice leader for global economics and scenarios at the research and consulting firm DuckerFrontier. Welcome to the program. Now, as we heard, Brazil, India and South Africa are expected to face the toughest road to economic recovery, but we also know they're already the hardest hit in terms of the number of cases, coronavirus cases, and the number of deaths from the pandemic. Why is it then that these countries in particular have been singled out in this report?
I think part of it's just their size, right? Sort of as noted, these three large emerging markets tend to have a pretty high percentage of portfolio investment inflows from a lot of Western investors. There's a lot of interest there. As well as when you add them up, as noted, it's about 10% of global GDP. So these get the attention. They're very hard hit, but they're certainly not the only emerging markets that are struggling to cope with the COVID struggle.
Yes. Now, in terms of some of the factors that the report outlined, it was this issue of governance. Does that suggest that corruption might hinder the economic recovery of these countries?
Certainly, weak governance is one of the critical challenges that has been revealed. So Brazil certainly has troubles at the top. We hear a lot about that. India's had its own challenges at the top, as has South Africa. But you have some other challenges in addition to those. For instance, in Brazil, the state-based decision-making model makes it even more difficult, even if you had strong national leadership, to really impose a strong national strategy to deal with containment and control of the coronavirus outbreaks at the local level before they become these sort of national waves.
Now, of course, this report doesn't only focus on these emerging economies because it also identified the US, which, as we know, is the world's richest country, as having one of the weakest coronavirus responses in the world. How might that affect America's economic recovery?
The U.S. has a benefit that most emerging markets don't have, which is very deep capacity to spend. And so we're seeing ongoing fights in Washington about whether or not to extend some of the exceptional unemployment benefits. But because of the size of the first several stimulus programs passed by Washington, most low-income consumers actually had their incomes increase during the initial waves of the coronavirus shock. And so that's really supported households and made it a little bit easier for the U.S. to cope with the overall shock, again, despite these high case counts. So as soon as this second wave of coronavirus cases across much of the U.S. gets under control, which it's trending that way, I would expect that you'll also see some additional stimulus come through and probably make it much easier for the U.S. to recover than these other emerging markets, which lack the ability to spend without concerns about massive exchange rate depreciation.
Yeah, so given countries like Brazil, India and South Africa don't have the deep pockets that the US has, as you mentioned, do you expect that those countries might have to look to international lenders like the IMF or the World Bank in order to help recover from this pandemic?
There's certainly a possibility that they might have to do that. The IMF and the World Bank have tried to be proactive, especially in trying to get suspension of interest payment on external debt cleared through. I'm afraid that at this point, it looks unlikely that the IMF and World Bank will be able to provide direct grants of the sort probably needed by these countries in the short term. We've actually seen quite a bit of fiscal spend so far out of South Africa and India, at least announced fiscal spend. But one of the issues that we're seeing now, again, a governance challenge, is they've been slow to roll out some of these programs and actually get that fund, those funds where they're actually needed in the real economy.
Okay, Ryan Connelly from DuckerFrontier. We'll have to leave it there, but thank you again for joining us on the program.